Hey, what's going on, everyone? So on Thursday, if you guys remember, I was saying that the SPY was at beautiful double layered support. What ended up happening was we bounced off of that level of support and then flew all the way back, made new all-time highs, and are now retesting this level of resistance that we've also been monitoring. All right, so in today's video, we're going to go over the SPY, the rest of the indices, the bonds, the dollar, and then the crypto market. Okay, so without further ado, 1 second before we continue, I post all of my option plays on Twitter completely for free live, right? And after I posted this, I posted another play for Tesla, went up for 65%. Okay, so it's all live. You can see all of my timestamps and everything there. And also, if you guys like the video and the content that I post, please make sure to subscribe and like the video. All right, so without further ado, let's get right into it. All right, so as you can see, the SPY bounced off of this beautiful layer of support. The support was, the bottom level all the way back to the March 2020 bottom. And this black trend line as well came from that same March 2020 bottom, but we connected it at different points. Okay, so both levels have been acting perfectly as support and resistance. So we've been trading above this black level the entire coronavirus, right? So now we are retesting that level to see if we can start trading above it once more. Okay, so as we can see, the SPY is literally at that point. So to break above now, tomorrow, the SPY would need to break above 437.85. Okay, so approximately above 437.85 is where the SPY can start potentially comfortably trading above this black level once more. Okay, clearly the support, the little blip that we had on Wednesday and Thursday was the perfect opportunity to buy into the market, because we were literally sitting at beautiful level of support and we bounced right off of it and everything worked out perfectly. Okay, so the SPY ended up hitting a new all-time high, and that's really it. Now we're just going to monitor how the SPY responds in this zone that has been, working out very nicely. All right, so there's the SPY. Now let's talk about the IWM. Okay, actually, let's check out the simple. Yeah, okay. So there's not really much to look at on the moving averages. So now let's look at the IWM. The IWM, you can see that the MACD is oversold, right? And first of all, when the IWM first began trading outside of the lower level of the B band on July 7th, right here, this candle, I said what would end up happening is we were either going to find support at 220 or we were going to find support at 218. And then we were going to start rallying back, okay? And the reason why I said that is because what happened the last time that we were trading outside of the lower level of the B band was right here in the middle of May. So we ended up trading outside of the lower level, right here. And then we ended up falling even further the next day. So we were trading outside of the lower level right here, right? And then we ended up trading even lower the next day and finding support. So very similar to what happened here. You understand? So I had a feeling that since there was very strong levels of support at 218, that is most likely what would happen, and it ended up happening perfectly. And the IWM was the leading indice for these past few days above the NASDAQ. And yeah, the reason for that is because the NASDAQ was very overextended, and we're going to look into more detail about that. But it worked out perfectly. When you are, and once again, when you are in a bullish market, okay, and you're trading outside of the lower level of the Bollinger Band, it is a very good buy signal, okay? Because we're trading one standard deviation away from the median price of this Bollinger Band. So that is a very big overextension to the downside, which means that the price wants to snap back and rubber band itself back. Like, imagine a rubber band. When it gets too extended, it wants to come back to the middle. And that's exactly what happened in these instances. So that's why it was pretty simple and easy to, predict what would happen on the IWM. We can see that the IWM is still oversold on the MACD, but it needs to cross above 228 for it to become bullish again. All right, so it needs to cross above this level. And yeah, if it doesn't cross above this level and we cross above on the MACD, then that can mean that we're going to have to consolidate around this price. But 228 is the main key resistance level on the IWM. And until then, I mean, there's not much else to look at on the IWM. Actually, the support is going to be 224, resistance at 228. Okay, that's about it. All right, so now let's look at the NASDAQ, the bond market, and the dollar. Okay, so this is the 30-year yield. And if you remember my explanation of the comparison between the 30-year yield, the dollar, and the NASDAQ, you'll know that when the 30-year yield is doing well, then the NASDAQ is going to be doing well. All right. But as you can see, towards the beginning of July, the 30-year yield began going parabolic. And we started trading outside of the upper level of the B band very dramatically. So again, imagine a rubber band, right? The price wants to return back into the middle, like the Bollinger Band area itself. Okay, so it wants to trade within this area. So when you're trading too far extended in one direction, it wants to come back inside. So that's exactly what happened. The 30-year yield, it had a bit of a sell-off. Now it's consolidating a bit, but because it was overextended for so long. And this movement here caused the NASDAQ to stall and to fall a bit. Okay, so basically we need to see now, I mean, just look at how overbought the 30-year yield was on the MACD. And we were also overbought on the RSI. So it was, and we were outside of the upper level of the Bollinger Band. So there were three key reasons why there was going to be a bit of a warning signal on the market. But within a few days, the overbought condition worked out beautifully, and now we're literally oversold. So that is very, very bullish for the NASDAQ. And that's also very bullish for the 30-year yield. Okay? Overall, that looks pretty good. Now I want to look at the dollar. Okay, so also you remember that if the dollar and the 30-year yield are doing well, then the NASDAQ is going to be doing well. Otherwise, it's going to go down, right? So you can also see that the dollar, gave back a bit of profits and it consolidated a bit. Now we can see it's extremely oversold and it's holding above support and it's, consolidating in a bullish way. This isn't a bearish pattern here. This is still pretty good, okay? And overall, if the dollar and the 30-year yield are doing well, the NASDAQ is doing well. So the dollar, we just need to watch if it can stay above 91.6. That's going to be the main level of support for the dollar, okay? Now we can look at the 10-year yield. So the 10-year yield, if you remember, if the 10-year yield and the dollar are both doing well, then the IWM is going to be doing well, okay? And conversely, the NASDAQ is not going to be doing well, okay? So we can see that the NASDAQ, fell at the moment of, all of these things happening in conjunction, right? So the 10-year yield was very overextended to the downside, very similar to the IWM, right? Because they were both trading outside of the lower level of the B bands. So remember, like a rubber band, it wants to be snapped back into the inner area of this B band. That's exactly what happened. Now we are a bit overbought on the MACD. We crossed above, but yet we haven't really crossed any major levels of resistance, which makes me feel that the NASDAQ rally is going to continue because of the weakness in the 10-year yield as well as just the strength in the 30-year yield. All right. So now looking at the NASDAQ, we fell and we had a topping signal at the same time as the 30-year yield on July 7th, right? We fell the next few days and then we just, we were basically chopping around this area because the IWM was the big winner during this time. All of the money was going into the IWM and not the NASDAQ. But what this gave the NASDAQ time to do is that it gave time for the NASDAQ to consolidate. And now we're oversold on the MACD, which is extremely bullish. So we're oversold on the MACD, but we're very overbought on the RSI. And we're still trading above this trend line, which is very, very, very important. So the fact that the NASDAQ is still trading above this trend line is very good. And the level that really needs to hold is going to be approximately 360, okay, to remain above this uptrend on the NASDAQ. So all of those things combined, that's how we got the analysis for the fact that the IWM was going to outperform the NASDAQ. And now, moving forward, we just need to make sure that we continue monitoring these other indices and bonds. So now we could also look at the crude oil. So crude oil is obviously, you know, it was going parabolic and now it's consolidating. We can see that the MACD is now about to cross above the MACD signal line, and we're holding the 23.6% fib at 73 very well. Overall, as long as crude oil is looking strong, the overall market is going to be strong. Okay, so crude oil looks pretty good thus far. All right, so now we can look at Bitcoin. Bitcoin is still trading within this range, okay? And it really, you know, so the targets to the upside keep on getting further and further away as the trend line, you know, continues on its path, right? But, you know, this is a very weak... Bitcoin needs some strength here because, I mean, like, we keep on retesting this lower level of the trend line, this lower blue line here. If that gives away, then this is going to really, I think, target a very strong sell-off into the 20s eventually. But, you know, as long as we hold above 30,000 and we stay above this blue line, that'll be very good. But once again, we're just trading within this range for quite some time. Yeah, aside from that, I mean, as long as Bitcoin's not doing well, then the rest of the crypto market is not going to do well. Some bullish signs for Bitcoin is that we are oversold on the MACD. But aside from that, I mean, we have been holding support here very well as well. But other than that, Bitcoin needs to hold and cross above these levels of resistance already. Like, it's getting it's been a very long time that we've been consolidating within this range here. And usually when we do consolidate within a range for a long time, we end up falling much lower. So if we start breaking down lower, that would be a very, very bearish sign. Okay? And because Bitcoin's not doing well, obviously the rest of the market is not doing well. Ethereum is much better. It looks much more bullish. The oversold condition looks much better than Bitcoin's. But again, Ethereum is not going to be relevant unless it holds and crosses above 2341. All right. And you can see the same with Litecoin and XLM and these other coins as well. So as long as Bitcoin is not trading back above this green trend line here, and also not trading above this blue trend line, then Bitcoin's not going to do well. All right. So aside from that, I hope you guys enjoyed the video, and I will see you guys tomorrow. Make sure to follow me on Twitter and subscribe to the channel. All right. Thank you so much.